Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
All right, well, Charles Schwab, the company, recently out with earnings. The stock rallying on the news. A couple of analysts actually raising their price targets on the company following that report. Core net new assets brought to Schwab by new and existing clients came in at $24.6 billion. Total client assets are now approaching, Tim, $10 trillion.
That stock near a 52-week high, up about 16%. I could say 18%.
Yeah,
year
18
to date,
today, yeah.
as of today. With more on the company and the business, joining us here at Schwab Impact is Rick Wurster. He's current president of Charles Schwab. Also incoming CEO of Charles Schwab, taking the CEO spot come January 1st. He's here with us on site in San Francisco. Good to be with you, the big annual event. How are you?
I'm loving it here at the event. 4,500 people here. There's so much energy, and it's all focused on helping the everyday Americans.
So let's talk a little bit about that and start there. What are you hearing? What's the big theme you're hearing this year as you walk around?
The big theme to me is always, what can we collectively do to make a difference in the lives of everyday investors? You mentioned the number $10 trillion. It's an overwhelming number, but behind every one of those dollars, it's a grandparent who's trying to help contribute to their grandkids' education. It's a family that's trying to take a nice vacation that they've been saving for. That's what matters to us.
I love that you say that, because as I walk around and talk to some of the advisors, you know, there may be $1 billion shop, a $2 billion, maybe even smaller, and they're always kind of apologizing. I'm like, no, you're the guys who are managing everybody's money. I kind of love that perspective.
Absolutely. And the thing about this community, we serve 15,000 advisors. They're in most communities across our country, sitting down to the table with people, helping them understand how to live their best financial life. And the power of that is so impressive.
Rick, one thing that has come up, we did a great broadcast from here yesterday, and no doubt about it, the elections continue to come up. How are you thinking about the elections, the impact that a new administration, new people running, different regulatory bodies, certainly that play into the financial industry, how it might impact Schwab?
Well, there's a lot of potential change at play. We've heard a lot of proposals. It will be really interesting and important to watch how those play out. And we stand ready to do whatever we can to help the everyday investor. That's our focus, and
do you think things change much because of a new White House and a new team? Do you anticipate, from what we've heard on the campaign trail and some of the people that are being considered for positions?
I certainly think that there will be change, absolutely. I think with any administration there's change, and we've been through all sorts of presidential cycles and election cycles. And at the end of the day, what it means for us is we adapt and we do whatever we can to help the end client.
Well, how are you thinking about this from a regulatory perspective? We did hear today that SEC Chair Gary Gensler is going to step down by January 20th. Certainly the crypto community cheering that. How do you look at a change in leadership at the SEC?
Well, for us, our company is built on trust and has been for 50 years. Our entire industry is built on trust. If people can't trust their financial institution, the whole premise of what we do goes away. And so I think regulators play a really important role in that. And we've always had a great relationship with regulators. I think from our perspective, we want regulation that is thoughtful and makes sense for the end investor. And when that's the case, we'll do anything to support it. And we're looking forward to seeing who the next chairman's going to be.
Rick, what does it mean for crypto? And I'm curious if you guys see yourself getting into the crypto business. Here we are approaching $100,000. We have a president who initially or president-elect who maybe wasn't so into crypto is now very interested in it.
Now he's got his own crypto company.
What about for Schwab? What's the play here? Do you see yourself getting into it?
Well, we're in the crypto business
even more
today.
Aggressively, yeah.
We have lots of different ways for clients to participate. They can buy ETFs today. They can buy Bitcoin futures. They can buy closed-end funds. I think we will get into spot crypto when the regulatory environment changes, and we do anticipate that it will change, and we're getting ready for that eventuality.
Is there I don't know, is it growing up in your view?
I don't know. It's an interesting asset class, and people have really gravitated towards it. And, we never like to judge what people want to invest in. People on our platform, we think, are very thoughtful investors, very sharp. They make decisions about what they want to invest in, and crypto has certainly caught many's attention, and they've made a lot of money doing it. I have not bought crypto, and now I feel silly. So they've been the ones making all this money on crypto.
Are you thinking about buying it now?
Me personally, no, but we certainly support our clients that want to do that.
You know, you answered my next question, which was going to be, do you own any crypto? But talk a little bit about that, because it's always interesting hearing from somebody in your space about their views on something. What's holding you back?
Well, I think what's holding me back is just a question around the true value of crypto. I like to invest in stocks, and with stocks, there's cash flows you can rely upon. There's dividends that accrue to you. With crypto, it's less certain what that will be, and it's less certain how to value it. So, to me, on a personal level, that's what makes crypto not something that I invest in. At the same time, we encourage our investors to invest in what matters for them. And I've talked to a lot of our investors who tell me I'm completely missing the boat, and they tell me all the great things about crypto. And you know what? They've been right, not me, because it keeps going up.
So far, they've been right. We'll see.
It's one we're going to continue to follow. It moves around a lot. It is a competitive space. Just this week, I just want to look at my notes. Robinhood announcing they're moving to the RIA space. I'm curious about how you are thinking about Schwab for the next 50 years as you get ready to take over as CEO. Not a new thing. Traditional investors, they're getting older. Younger investors, how they want to play and have more options. So what are your thoughts about Robinhood's move and maybe what you guys need to continue to do to attract younger investors who want those more options?
Well, for 50 years, our central theme has been to see through clients' eyes and do right by them. And we attract a lot of young investors to Schwab. In fact, 60% of our new-to-firm clients every year are under the age of 40. Our client base actually gets younger every year. So it's sometimes we're not thought of as that way, but we attract a lot of young investors because we have what we think is the best trading platform in the industry. And it also comes along with what we think is the best educational and training platform in the industry. And that aspect has really appealed to some of our younger, newer investors.
Got to ask you about the training side. And talking with advisors here, I was up on the stage doing a panel on artificial intelligence. And so many people came up to me afterwards, and they're like, we got to talk to Schwab because I think we need a Schwab chatbot. AI, though, is impacting everything. How are you also, acknowledging, thinking about how that needs to be incorporated into what you offer up the advisory space?
Yes, so that comment about wanting an AI chatbot, what they don't recognize is that actually behind the scenes we have built one for our client-facing professionals. And so it used to be that 60,000 times a month we would have a phone rep spend more than 3 minutes searching for a piece of information to answer a client question.
Right.
And now we have built an AI capability that finds that information in seconds. And so it makes a better use of the client's time and allows them to focus and go deeper on wealth issues that we could potentially help them with.
But is there another level that you continue to think about? Okay, where does this go in helping advisors in terms of portfolio management or building out their businesses?
I think AI will have a really big impact on our industry. I think it will do a lot to help us better serve clients, to empower our professionals, to give them the right information at the right time.
Right.
I think it will also allow us collectively to help serve clients that we couldn't otherwise. We have 15 million retail clients. We can only have a person-to-person relationship with about 10 to 20% of that client base. There's 80% that we don't get to have that in-person dialogue with, and I think AI could bridge that gap and allow us to reach more clients.
Hey, before we let you go, I want to talk a little bit about the balance sheet, because you basically said you're trying to shrink the bank's balance sheet and not hold as many loans on the balance sheet, given what happened a couple years ago, close to 2 years ago with the regional banking crisis and the way you guys were brought into that. Just give us an update there on what you're going to do when you become CEO.
Well, I want to clarify. We never said we wanted to shrink our balance sheet. What we did allude to, and I think what you're referring to, is on an earnings call, we said as our balance sheet grows, we would consider using a third-party bank to take on some of those deposits. That's something that could make sense for us because of the way the economics work. We have to hold capital against deposits. We can send some of those deposits to another bank and earn a better return relative to capital when we do so. So it's a tool to have in our toolbox. It's not something we're going out and doing immediately. It's something we're considering. We'd only do it as our balance sheet grows and when it makes sense to do.
Challenging year, certainly for Schwab, with the regional bank crisis and so on and so forth. We talked about a lot on Bloomberg. Just got about 30 seconds. Are we past it? Do you feel confident? Or what's more to be done in terms of the impact that we've seen in the past year?
I've never been more optimistic about our business than we are today. We're number one or number two in the two fastest growing segments of the financial services landscape. and our client satisfaction scores have never been higher than they are today. So we're hitting on all cylinders as we roll into 2025, and I couldn't be more excited about it.
15 seconds. What's the most interesting thing in the investment space, do you think, right now?
I think the engagement among clients. It's just wonderful to see how engaged they are in markets in their financial life. When people own their tomorrow, they tend to have great financial outcomes.
Rick, thank you so much. I know there's a lot going on. I know this is a big event, but carving out some space for us, we really appreciate it.
Well, thanks for making the commitment to be here. We love having you here.
It's a great perspective that we get to come and take back to New York and kind of share with some of our other guests. Rick Wurster, current president of Charles Schwab, taking over CEO on January 1st. This is Bloomberg from Impact.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, as you just heard in our conversation with Rick Wurster, Schwab alone has about almost $10 trillion in assets. Those assets essentially split evenly between retail investors and advisors. Now, as for the many registered independent advisors that Schwab works with and provides services, more than 15,000 independent advisory firms with over $4 trillion in assets under management. And what Schwab does, you know this by now, provides a variety of services. We're talking about custody of client assets, technology, trading, also banking, and a lot more.
Overseeing all that side of the business, Jon Beatty is head of Advisor Services and a member of Charles Schwab's executive committee. He joins us here at Impact 2024 in San Francisco. How are you?
I'm doing great. Pleasure to join you today. We are having a great time here at the conference. Lots of optimism, great vibes.
Okay, well, let's talk a little about that. And I don't want to jump right into it. We got a good bit of time with you, but you have a big job overseeing all this side of the business,
yes, sir.
Which I think retail investors don't really understand. But a big part of that is what happened with TD Ameritrade and that purchase. Wow, at this point, almost 5 years ago.
It's amazing.
Are you fully integrated? Has everything been fully brought over to Schwab?
We have been through the whole process, and certainly we did the conversion Labor Day of last year. And since then, we have been working through the opportunities for improvement, the feedback from our clients through that conversion. Finding opportunities to enhance the platform for them, and so that is in the rearview mirror now.
So, what was or has been the biggest bit of feedback you got from these clients? What changes have you made as a result of what you've heard from them?
Yeah, we went into the acquisition with the aspiration to bring the best of both platforms together, and we did that. But for advisors moving from one platform to another platform, it's changed, right? So they had to learn a new system, and while they were learning that, they gave us feedback on how the technology works for them, where we could find ease of doing business, more scale and efficiency, so that they could spend more time with their investors. So they were coming at it from the right perspective in terms of wanting to be out, finding time with investors, as well as finding new clients to the platform.
Jon, one thing I want to ask you is, okay, so technology, things that advisors need. Did a panel here earlier about AI, right. And I can't tell you how many advisors came up to me and are like, oh my God, I wasn't using ChatGPT. I downloaded it and I've just spent 20 minutes playing around with it. How is AI, generative AI, LLM, large language models, how are you thinking about what you need to be offering up to your advisors?
Yes, we are leaning into it, cautiously optimistic, going at it with a good pace. Our first place of opportunity, we think, is in knowledge. There's a lot of operational experiences between us and advisors, and so if we can bring knowledge to the fingertips and of our service professionals as they're working with advisors on the phone or through email or chat, we can be more precise in our answers and avoid work in not good order, which slows down the business and is a drag on friction within the business.
One thing, though, I got to say is people are worried, advisors are worried that they're going to be replaced by generative AI.
Yeah.
So I know there's hype, I know there's reality, but the conversations I'm having is that, yes, some jobs are going to go away. There will be new ones created as a result. So how are you also thinking about maybe that fear among many of your clients?
Well, we think, as we have with lots of technology, there's a cycle to it. And certainly things that are basic or that can be automated will be great opportunities for artificial intelligence. But that will just allow people to spend opportunities in value-added services in places that AI won't be able to go. And we think that investing is a relationship business. People want to talk to a human. It may be a long time before AI could replace that.
Sometimes I don't want to talk to a human. I'm
Yeah.
just going to put it out there. But I get it.
Yes,
I get it.
yeah. I mean,
But managing your money is personal.
yeah, investing is technical, but it's also emotional, right?
Yeah.
And so I'm not sure when AI will be able to handle somebody's emotions as it relates to the reaction to markets ups and downs, to be able to counsel somebody in that way. So we think that that's where the human intelligence plays a big role in the future.
To what extent do you help with portfolio construction behind the scenes with the RIAs, or is that left completely to them?
Yeah, our job as a custodian to advisors is to give them a platform where they can express their views on investing, whether that's through different kinds of products, ETFs, mutual funds. Certainly, alternative investments is a growing part of the portfolio today. Even crypto is being discussed some between us and advisors while we're here. It's the newer part of the marketplace. So. And then it's the automation of investing, trading systems, rebalancing systems. That's where we can add value so that they can do their job of picking the investments and building the right portfolios based on the personal needs of one investor versus another investor.
How much, when you look at the growth that we've seen in the wealth management business and client assets coming in, how do you think about it going forward? We talked about the aging population, transfer of wealth, younger generation. What's your perspective on that?
A ton of opportunity for advisors. So we see the RIA channel is about a $9 trillion business right now.
Right.
We think that by 2034, it could be a $20 trillion business based on math and the momentum around growth.
Right.
Right now, there's $37 trillion of investable assets sitting in the traditional advice models. And that's the market opportunity for the independent advisor who brings a fiduciary type of advice model to the marketplace. And that's differentiating from an investor experience perspective.
How much of your business is about getting new RIAs on the platform, getting them to leave other custodial platforms coming to you versus growth of their own platforms?
I'm glad you asked that. It's about an 80-20 equation. Certainly, individual investors are waking up to the fiduciary model and choosing to work with independent advisors. But we see advisors in those traditional channels waking up to the business opportunity as well and exiting those channels to join the RIA space, registering with the SEC or their local state, starting their own firms, and joining the winning model. In addition to that, more recently we've seen advisors choosing not to start but to join existing firms in the RIA space. The joiner model is also fueling the transition or the transfer of assets from one part of the marketplace to the other part of the marketplace.
What are you seeing in the advisory space? I mean, just as you said, new folks coming in, but is it smaller firms that continue to dominate, or is it smaller firms combining to be bigger firms? I'm just curious about the competitive landscape.
We serve 15,000 advisors nationwide, as you said.
Yeah.
Small firms, $100 million of less of assets under management, and firms with $100 billion of assets under management.
What's the bulk?
The bulk of it's always the 80-20 rule, right? So 20% have 80% of the assets.
Yeah.
And as you know, M&A activity is grown in this space, and that's private equity and capital coming in to support a fast-growing market.
Yeah.
And we think that's a positive. But we also know there's a lot of fiercely independent entrepreneurs who are self-capitalizing their businesses and growing as well.
So consolidation in the space, net good for you?
We think it's positive, yes.
What happens if these companies consolidate and then they go to a different platform, though, or they get bought by a larger company that uses a different platform?
We're in all parts of the market, so we can benefit whether they choose to be a small firm, a mid-sized firm, or a large firm. So we can support any type of advisory firm in the marketplace. So when firms choose to come together to bring scale and efficiency to their business, we're there with them to support that. Sometimes advisors want to break away and start their own firm. We can help them launch those firms as well.
But does their scale give them more leverage over fees that they pay you? Are they able to?
Most of the fees have been wringed out of this business, so there's not much to negotiate anymore. So we're focused on aggregation
goes
of
back
assets.
to the origin of Schwab, right?
Yeah, it's about going to get the market share in terms of assets. The monetization aspect of it is pretty worked out in the marketplace. So not a lot of discussion in that aspect of it.
You know, we talked with Rick Wurster about the election outcome, politics, who will be in charge, what kind of policies. I don't know. How does that impact you on a day-to-day basis or longer term in terms of thinking about what you need to be doing?
Yeah, we're focused on investing. That's our core competency. And
everybody says that, but election,
right,
politics, it does matter in terms of policies, right? And who are the regulators and the types of things that come down. I mean, the markets initially seem like it's pro-business, pro-markets, but we shall see in reality.
Yeah, and there's lots of different takes on that depending on which advisor you talk to. And that's the beauty of the open architecture, is that there can be different perspectives, and investors can find the perspective that they enjoy and invest with those folks, and advisors can move from one firm to another firm. But it is quite optimistic here, so I think everybody's looking to go forward from this point forward.
I have to say, Tim and I think, loved coming to investment folks or events like this that you guys do, because you get people from all around the country, people managing, big offices, smaller offices, medium-sized offices. What is it that you are seeing in your business, what's going on, what you're hearing here on the ground that tells you about, I don't know, market sentiment, market behavior? Are there more risks out there? Are there less risks? Is there a big macro that you take away from here?
I think one of the areas of opportunity that I'm hearing advisors talk about is the opportunity to enhance performance through tax harvesting and creating alpha by managing portfolios in a tax advantage kind of way.
Yeah.
I think that's a place of differentiation for advisors and for the asset management community to earn opportunity with these advisors. Certainly that serves investors very well, right? So I think that could be the next frontier in the financial services industry.
Give us a prediction of what we'll be talking about if we're sitting across from each other a year from now at Schwab Impact 2025.
To be held in Bora Bora or Tahiti. I'm just saying, an idea.
Or Hawaii if you want to keep it in the U.S.
I hate to crush your dreams, but we're going to be in Denver next year.
Yes,
okay. Yeah,
that's fine.
And I think we're going to be talking about the momentum of the marketplace and how advisors are finding differentiation and earning more opportunity and serving more investors, helping investors reach their financial dreams. And that's what it's all about for us, and as we have that shared vision with these advisors here.
Do you get all the talent you need, the workers? Is that 20 seconds? Are you finding all the skills that you need in people?
As you know, we are actively involved with universities. We sponsor 35 different universities nationwide in their financial planning programs.
Yeah.
We think advisors are going to hire 70 to 80,000 new employees in the next 5 years. So the talent is the fuel to growth, and we're focused on it.
All right, great stuff. Jon, thank you so much.
Glad to be here.
Good that you could stop by. Jon Beatty, Head of Advisor Services, a member of Charles Schwab's Executive Committee.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
TikTok.
Oh, is it already?
Yeah.
With this 2-hour show that we're doing.
I know. We feel
It's a
really
little different.
spoiled. And we're like a little off in terms of the market close.
I'm always off.
No, you're
Yeah.
not. You're always on.
It's like lunchtime here in California, which is a great place to be, by the way, when you're following the equity markets in New York.
I know, right?
Everything kind of ends at 2 o'clock.
Go out and
1
have
o'clock.
lunch.
Yeah.
It's kind of nice.
Nice.
And markets, as we just heard from Charlie, we're just kind of rolling over our best levels of the session when it comes to the S&P 500. It's the Dow that's the outperformer. I know you can debate whether or not you like the Dow, but nonetheless, it's up about 1%. Let's get to our Drive to the Close guest. Jalina Kerr is with us. She is Managing Director of Client Experience, Schwab Advisor Services, works with Jon Beatty, who was just on, and she's here at Schwab Impact in San Francisco. Good to have you here. How are you?
I'm great. Thanks for having me here.
So tell us about some of the conversations you have with Jon about, what you're hearing from advisors, what they want, what they need. What's the churn, back at Schwab offices about, okay, what do we need to be focusing on?
I think it's a bit of a collision of sort of two things, two forces that are going to come together, not in a scary collision, but a really good sort of combination of things. And that's technology and scale paired with personalization. And I think it's really interesting because there are a ton of tech solutions out there, third-party providers. There are so many solutions, yet I think advisors are asking us to think about how they harness those solutions together for their clients.
What does personalization mean? I feel like we've been talking about personalization in finance for a long time. So what exactly does that mean for you on, this Thursday here in San Francisco?
Yeah, bit of a buzzword, right?
Yeah.
So for us, I think it means finding the solutions for unique client needs. And that's what it really means. So it comes down to not, I know who you are when you show up in this piece of technology or that piece of technology. It's about getting to the root of, if you're an investor, you've got a solution that you need to solve a problem with a tax situation, or you're inheriting some wealth. You need an answer. You need a customized solution for how you're going to deal with that personally with what you need. And that's, to us, what it really means. So it is, though, a balancing act because you want to be able to do that scalably. So that's why I meant about the collision. Like sometimes personalization runs counter to scale. Scale could unlock it, but then you can start to get into a echo chamber of complexity.
Where do you come in, though, when it comes to personalization? Because these RIAs who you support, they're the ones who are the ones doing the personalization for their clients. Where do you come in?
I mean, we continue to be very pro-open architecture. If they want a solution that we haven't yet explored, we're willing to look at it. I think, though, what we have to do now is make sure we're making that as simple as possible, because if we just keep layering tech on tech on tech, those things don't work together the right way, and they have to work together for people first and foremost. So you got to skinny it down a little.
Do you care if they use a Schwab ETF versus a Vanguard ETF?
Completely agnostic to the offer solution. We're proud of our solutions. We do have some great optionality in the wealth management space. So do third-party providers, and it's all about really finding what advisors need.
You began your career on the Schwab trading desk, Schwab. But I do also think about, it's so funny when people are even in broadcast, I'm like, go and do as many different jobs, and then you really kind of understand the industry. Tell us about that experience and how that has helped you to where you are today, and kind of understanding what's needed.
Yeah, for me, that is how I got where I am. I've been at Schwab for 30 years, and I've done just about every job, all of it in the advisor space. So I got to grow up watching this industry grow up.
Right.
And seeing both client service delivery, what do advisors need when they are calling us and relying on us for a solution, as well as what those solutions need to be. And that's kind of where I sit now, is trying to bring these offer solutions to the table, whether it's tech, whether it's a product solution, got to harmonize it. So it's been a cool journey.
What would the Jalina of 30 years ago be like, kind of shocked about what's going on in advisory services today?
Oh, wow. I think the proliferation of technology, really, not to harp on technology too much, but I think RIA space has been growing so quickly that you have seen such opportunistic advancements. And so I think looking back 30 years ago, thinking, okay, back then you got to trade on a faxed piece of paper.
Right.
That's where we've come from. Now you could get it via a fixed connection. You could do it direct on the website. You can submit something through your own portfolio management system. So I think that complexity that I talked about a few minutes ago, it's here, it's real, and we've got to help sort of simplify and smooth out that ecosystem for advisors so they can spend time on their clients, which is the most important thing.
What's interesting is Schwab has its own advisors also. So I could walk into a Charles Schwab brick and mortar location in many different cities and towns across the country, or I could use a registered investment advisor who on the back end uses a Charles Schwab product as for custodial purpose. Which one do you prefer?
I got to say I don't have a preference. It comes back to the client's needs and what they desire. Some clients want to work with somebody in a physical location that they can walk into, touch, see, feel. RAs can do that. We can also do that in other parts of our business ecosystem. But really, let me put it this way. We have in our space $4.5 trillion worth of assets under custody. For half of the company's size. Our company believes in the power of RIAs as well as what we do on the retail side. And there's plenty of opportunity, $37 trillion worth of opportunity out there for us all to serve those people and meet their needs. And it's really about the clients.
All right. So I got to say, coming off that AI panel that I did this morning, somebody came up to me, one of the advisors, Schwab needs its own ChatGPT, using information that Schwab already has, tying it into performance and to the analysis and future analysis.
This advisor is spot on, and we're working on this right now. So we're going to start internally.
Okay.
We're doing a chat GPT-like solution for our service professionals so that when advisors are talking to us,
right,
they get the right answer the first time. But what we're going to do is extend that into our internet solutions so that advisors can access that directly too. So we're on track for that.
What does it look like?
It really just looks like a knowledge assistant. You ask it questions, much like in the session this morning where they're typing in the questions, and it's going to feed you back the best answer.
How are you training it?
A lot of trial and error. Actually, we have been practicing on it for 6 or 8 months. The early hit rates, certainly some failure rates, we've seen that go up by about 40%. So started with about 40% accuracy. We're about 85% accuracy now. So it's continuously learning because people just keep feeding questions in.
But who's feeding questions to it? And is it
our employees?
So, but when if I'm a customer of Charles Schwab and I call Charles Schwab, would you be able to use my question to somebody on the phone, then to help train that AI?
Yes, and that's exactly what's happening. They're using it on the phone and typing it in response to a client inquiry. So it's really cool.
Does it get to the point where it listens to me and then automatically gives the answer to whoever I'm talking to?
Yes, our voice technology actually can pick up not just on what they're saying, but the emotion of what they're saying too, and flag if, hey, we need to talk to you a different way because you're getting frustrated or upset.
Do you feel like in terms of AI, we're just scratching the surface of how it's going to affect investment advisors and your interaction with them?
100% scratching the surface. We're starting in these safe places like the example we just used. I feel like it's a ways off before we can really rely on that for portfolio solutions.
Yeah.
That's a ways off, and there's regulation we've got to consider.
Okay, yeah, which is why we talked about regulation in Washington with Rick Wurster. Jalina, thank you. This was fun. Jalina
thank you all.
Kerr, she's Managing Director of Client Experience at Schwab Advisor Services. You are listening and watching Bloomberg Businessweek here in San Francisco.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.